I want to share investment strategy that very common among Malaysian. I doubt it applies to the Japanese, Chinese, or even the American, which I call isolated investing. Okay, so I'll share this characteristic of this investing style, and you see whether you can identify to this kind of investing style or not. Okay, and I can say that from my professional experience and professional view, this is an unproven investment strategy because it's not certain that it will give you the kind of return that you want. So what do I mean by that? Number one, isolated investing. It is a situation whereby the investor always try to catch the best opportunity at a time. Say for example, last year, when this gold is doing very well, some people say, then I should invest into gold. So if you look at example, I can share with you here. This is a colorful chart. I shared it before, but now I'm going to share it with you again. Now, you can see here, this is a chart that shows the different year, okay? And from 2010 and to 2020, it also shows different asset class. This color shows that this is a Malaysian equity, this is emerging market, this is Asia ex-Japan, this is emerging market equity, global bond, diversified portfolio, US equity, global equity, Japan equity, Asian bond, and European equities. So it shows that in the year 2010, Malaysian equities is the one who did the best. So for those people who practice isolated investing, chances are they say, well, since this is doing very well, this is doing 23%, I should be investing into it, or put more money into it. This is what I mean by to catch the opportunity. But let us see what happened next year. Okay, it's doing well in 2010, but 2011 it fall, and 2012 stay, and it go lower. Later, go to the bottom in 2014, still at the bottom. At the bottom, go to the middle, 2019, go to the bottom again, and 2020 also not doing so well as well compared to other asset class. So we can see when we try to do isolated investing, it's very difficult to guess which investment will do well next. Past easy to tell because it's a foregone conclusion, it's hindsight, but going forward it's difficult to tell. So when you try to catch this opportunity, it's challenging. And isolated investor, normally when they invest into different asset class, property, invest into say Malaysia share market, they will invest in the isolated manner. But we should say, when they invest in property, they would not consider so much about how much Malaysia that they have. Or when they invest in Malaysia share, they will not consider how much property they have got. So there's no consideration how much you put into property compared to other asset class in the total wealth that you have got. Now, say for example, typically Malaysian like to invest in properties. So when you so engrossed into investing too much into property, you will end up maybe 80–90% of your wealth is into properties. So we know this because over the years we got many clients or potential clients who visit us, who show us this kind of profile when it comes to approach us. Then what it will end up is that you will have one asset class dominated, and you have got, for example, share only 10% and cash is only 10%. This is overexposed into one asset class and missing the opportunity from other investment. Okay, and when you do isolated investing, they also tend to have a situation whereby you focus too much on the ROI of one investment. Say for example, some people when they do well in share market, they buy some growth stock, and then they do well. They make about say 20%, 30%, or even 50%. Wow, they are so happy. I have done so well in investment, but they do not know that when they claim they can do so well, say 50% return from share market, actually the share they invest only comprise 5%, only 5% of the total wealth they have got. So if I can show you a picture, you can see here, 30% return, no? But 30% return is only 5% of the total wealth. The rest of the wealth, some lost money, and some of course good, getting 12%, but only 10% only. And there's a lot of money still sitting in the bank, earning maybe 2% or even less. So that is definitely not getting good growth in the total wealth to achieve financial freedom. Okay, so that's why I saw that investing, despite the fact that I always want to say, I want to aim for high return, I want to look for the best opportunity, but coming to growing wealth to achieve financial freedom is always slow.
If money is important to you, please remember to subscribe to my channel.